Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, we're very pleased you joined us for the third day of our Battery and Precious Metals Conference. Kicking us off today is a live presentation from Arizona Sonoran Copper Company. And before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. And if you're interested in meeting with Arizona Sonoran, please click on the Scheduled Meetings tab found in the platform navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Nico Lakakis. He's the Vice President of Finance and the Chief Financial Officer of Arizona Sonoran Copper Company, which trades on the OTCQX Best Market under the symbol ASCUF and on the TSX under the symbol ASCU. Welcome, Nick.
Thanks, John, and thanks everyone for joining me this morning to talk about our very exciting cactus project in Arizona. I'll draw your attention just briefly to the cautionary statements that will contain some forward-looking information. We are on a very exciting path at Arizona Sonoran. We're on a path to develop the next copper mine on private land in Arizona. The key elements of the project that we're excited about is our growth potential. We're sitting on a brownfields porphyry copper project with a solvent extraction electrowinning process, and we'll be producing copper cathode ultimately. We have advanced our activities with respect to the water and the surface rights, and we operate in Arizona, which we consider a top-tier jurisdiction and one of the best mining jurisdictions on the planet at the moment. And geopolitical risk is certainly a key element with respect to investor consideration of mining assets and mining companies. I'm going to talk a little bit about our project, our exploration upside. And I briefly wanted to let everyone know that we do have an experienced management team with a proven track record of delivering successful mining projects. The team takes an environmentally and socially conscious approach to the project, and this will be no different. Our goal here is to produce a net zero emission copper company to the benefit of the environment and to other ESG parameters. Quickly on the capital structure, our market cap is just shy of 200 million Canadian dollars at 186 million dollars. We have just a little over 106 million shares outstanding. We enjoy analyst coverage from 7 independent parties. With respect to our ownership structure, we have 2 very supportive shareholders in Tembo, which is a private equity fund out of the UK that owns 32% of the company. And we also have the benefit of having Rio Tinto be a shareholder in our organization, and Rio Tinto holds just a little over 7% of the company. We trade on the TSX and on the OTCQX, as John had mentioned. We have a very experienced management team and board led by our CEO, George Ogilvie. We have a lot of experience in the mining space, both on the exploration front and the development side, and we definitely have the right skill set to bring this mine into production. With respect to, it's a little bit of a small map here, but just locationally, the asset is located in Arizona in a Tier 1 jurisdiction. We are 45 miles to the south of Phoenix, which is a city of about 4.5 million people. We are 75 miles north of Tucson, which is a city of 1 million people. And closest to the site is the city of Casa Grande, which hosts about 55,000 people. We do have the benefit of being very close to infrastructure. The I-10 is about 10 miles due northeast of the mine site. We have the Maricopa-Casa Grande highway just to the south of the ore body. The site is serviced by roads. We have a power line and we have a rail line just at the southern border. So as far as most mining operations goes, this is about as good as it gets when it comes to being close to infrastructure. We've enjoyed some very good success over the course of the last 12 to 24 months. One of the things that we do is we try to monitor how wisely we deploy shareholder capital. You'll see in that chart on the top left that our discovery cost is exceptionally low. We are finding copper at less than 1 cent a pound compared to a copper price that's hovering in the $3.90 to $4 per pound range. That's telling us that our exploration programs have been successful, and we're going to continue down that path with respect to organic growth. And until we see diminishing returns, we think that's going to yield great results for us. Just over to the right, you'll notice where we sit. We are a very significant independent copper developer in the U.S. We believe we have the third largest asset at the moment, next to the Pebble asset and the Santa Cruz asset, which just happens to be our neighbor to the south of the ore body. With respect to the site itself, I know this is a bit of a busy slide, but as you can see, we refer to Cactus West. That's the open pit that you can see in the picture on the bottom right-hand side. The Cactus East project is an underground operation just slightly to the northeast of the Cactus West project. I'll talk about our very exciting Park Salyer project, which sits 2 kilometers southwest of the open pit. And we recently acquired the Mainspring property, which was instrumental with respect to our land package. We currently have just shy of 5,400 acres, which will be more than enough in terms of what we need for the development of our pre-feasibility study. Just quickly, you could see, I'll show a better picture of this shortly, but in terms of grassroots activity, one of the areas that we're focused in on at the moment is what we call our Northeast Extension, which is over to the northeast of the pit, and the Gap Zone, which is a zone in between the pit and the Park Salyer property. But quickly, we're doing on-site metallurgical testing, which is going very well for us. We have water wells and water permitted. We have water permits all the way to 2070, so well beyond the scope of this project at this time. I talked a little bit about the rail line. We currently have the benefit of a stockpile, which was as a result of some historic operations. ASCU had operated this mine. It was called the Sacaton Mine. The operation ceased in 1984, but as a result of the mining activity, they had stockpiled what we consider mineralized material. So when we refer to that stockpile, that's what we are talking about. The benefit of that is it's been mined and extracted and sitting on surface. So it's actually very advantageous from a cost perspective to get that material processed as quickly as we can. Just a little bit about the operation itself. It's a heap leach SXEW proposed operation. We have secured our water rights. The site is entirely on private land, which is of a huge benefit with respect to the permitting process. We are currently in the process of completing our pre-feasibility study, which is expected in Q1 of 2024. We're conducting 105,000 feet of infill drilling in preparation of that pre-feasibility study. We're doing some ongoing metallurgical testing. Our permitting is well advanced, and we've appointed a group called ASCU to lead this exercise. Just over the last year or so, if I can direct your attention to the bottom left of that slide, you'll see Park Salyer. We were fortunate enough to identify 2.5 billion pounds of inferred mineralization at a grade just slightly above 1%. We consider that a game changer for our organization, and it was a clear demonstration of the success we've had with our exploration program. We're very excited about Park Salyer given its scope, its scale, and its grade. And later on, when we develop the pre-feasibility study and we start to communicate the parameters around it, Park Salyer will clearly be a key part of that equation. Just quickly, with respect to the major permitting, we have an excellent relationship with the regulators within the state. We've obtained a number of key permits. Most recently was the mine land reclamation permit, and before that, the aquifer protection permit, both key permits with respect to the process. The next key permits for us are the industrial air permit, followed by a construction permit, which we will need prior to construction decision. But once again, we're pleased with the progress we're making on the permitting front, and we're certainly well advanced with respect to our competitors in the region. This slide is a timeline basically to production. You'll see up at the top, we've identified the timing quadrants and quarters. We're currently doing some drilling, metallurgy, and detailed engineering. Our goal is to release the pre-feasibility study in Q1 of 2024, at which time we'll give the market a first sense of some of the progress we're making, and we'll be able to embed that into the economics and obviously communicate that with our shareholders. We anticipate the permitting process to continue throughout 2024, and at the same time, we'll be working on a project financing. The construction, as it's currently contemplated, begins in the fourth quarter of 2024, and we're expecting to complete that in 2026, at which point we estimate first cathode to be produced. Our timing is actually quite fortunate. If you could, I see that the graphs at the bottom are a little small, but the one thing I wanted to mention to our investors is carbon is a central theme to the whole concept of decarbonization, and it touches everything. And the result of that is that the demand is expected to improve materially. As everyone knows, copper is durable. It's got superior electronic conductivity, and it's reliable, which means, it's one of the primary metals used in electric batteries and electric vehicles. If you look at the projections at the bottom right with respect to demand, and at the same time, we're also anticipating global supply to fall off. When we introduce our supply, I think we'll be right in that critical time in the market where we believe we're going to enjoy a higher copper price, certainly higher copper prices than today. And our project is really well positioned to take advantage of those supply-demand fundamentals that we're anticipating. With respect to the future, as I mentioned earlier, part of our focus is growth and organic growth. We believe that is the most effective and the most efficient way we can add value to shareholders. As I've mentioned earlier, we've demonstrated that, and we hope to continue to do so going forward. We categorize our asset in three different quadrants: the oxides and the enriched material, which is embedded in our economics. We also have the benefit of what we call primary sulfides, which is a copper-bearing mineral called chalcopyrite. You'll see it in the gray zones highlighted in the cartoon. That chalcopyrite is not embedded in any of the economics. We've developed a partnership with Rio Tinto's Newton technology with respect to being able to leach out those primary sulfides. We view that as a complete upside. We're working closely with the Newton folks, and we're showing 72+% recoveries with respect to those primary sulfides, which in short is very, very positive for us. The technology assumes it'll be a simple heap leach and SX-EW flow sheet. So in other words, we'll be able to embed it into our existing flow sheet. If successful, we believe we can add another 1 billion pounds of copper for assignment into the PFS, which obviously will have a material impact on the net asset value and the economics for the project. With respect to our short-term goals, we're looking at the gap zone. If you can look at the bottom of the slide there, you'll see the word open. That's intentional. It means that we just haven't conducted an exploration program there. You can see that we've got mineralization on either side of that gap zone. So we want to pursue that opportunity and see if we can potentially add to the existing resource. The northeast extension is at the far right of the graph. We've had some historical showings there, including 3% copper, which is quite high grade, over 47 feet. It was a historical hole that we're following up with now, and we're obviously hoping to continue to enjoy exploration success based on some of those historic measures that we've uncovered there. Just quickly through the peer benchmarking, we get asked quite a bit with respect to our evaluation. Not surprisingly, we're currently in the stages of developing a pre-feasibility study, which will then be followed by a feasibility study, a construction decision, and then production. We currently trade at a P to NAV ratio of 0.45 times versus our peer group at 0.6 times. We believe we're doing the right things with respect to exploration, permitting, development, engineering, sustainability, all the key attributes that we think we need to put a successful mine into production. And as we continue to deliver on those goals, we believe that gap will narrow between ourselves and that peer group. And consequently, we believe that this is a wonderful buying opportunity for investors. The next slide just demonstrates much of the same. You see on the left-hand side, we look at the enterprise value, and on the right-hand side, we looked at the projected production rates for our peer group. Our current goal is to target somewhere between the 80 million to 100 million pound per annum range of production. We think that puts us into a sweet spot with respect to a decent and a sizable operation. The other focus for us is a long mine life, because as everybody knows, as you continue to explore and as the longer you're generally at the site, the more success you generally have with respect to adding resources and reserves to the equation. But as you can see here, if we can target that 80 to 100 million pound range, we believe that there's a substantial value gap. And as we get closer and closer to those targets, that value gap will start to diminish with our peer group. And obviously, at the same time, we'll be de-risking the project, which we understand is a key consideration for our shareholders. This is a bit of a busy slide, but there are three key takeaways that we wanted to leave you with. We're developing a meaningful copper asset in a tier 1 jurisdiction in Arizona. Mining globally is becoming much tougher. It's certainly becoming much tougher in lots of places in the world. We're fortunate to be in Arizona. We think it's a mining-friendly jurisdiction. We have terrific stakeholders to deal with. We have, I did not mention, but I will mention now that we have excellent community support running at around 86% from Casa Grande and the surrounding communities. And we hope to continue to build on that support as we develop the asset. We've established strong local partnerships, which we think will be a win-win for everyone involved. Number two, we've demonstrated meaningful exploration growth, and our plan is to continue to actively explore in the region. We think we're not done yet. We believe that we have some upside there. We have to demonstrate that, of course, but we have an excellent and extremely bright exploration team that's leading that charge on behalf of the company, and we're quite excited about the prospects for the asset itself. Number three, we are well advanced compared to our peers in Arizona. We have a very moderate time horizon to production and a short time horizon to unlocking potential value. This is critically important. Our peers in the area also have decent projects, but I think they're well behind where we are with respect to our prospects. So we're certainly at the front of the line at this stage with in terms of getting this mine up and running to the benefit of all stakeholders. I don't have anything else. I think at this stage I'll stop and go to the Q&A section. Just bear with me, folks, because I've got to read some of the questions as they come in, and I'll attempt to answer those to the best of my ability. The first question that came up is, what's the history of the brownfield site and how did you come to acquire the rights? The site was operated by ASCU back in the late 70s and early 80s. They had some success operating the mine. At the time, the copper price was fairly low in 1984, and the mine ceased operations. It was then taken over by the state, and we had acquired the rights directly from the state. And it's a win-win partnership with the state because I believe that they were also keen to look towards bringing a partner to help develop the site, obviously for the betterment of the community. Second question was, when will production start? So we're currently estimating production to begin sometime in 2026. And as I mentioned earlier, we're expecting it to begin right at the time that we anticipate that there'll be significant demand for copper, and hopefully that demand will then result in a higher copper price relative to the spot market. Let me just see here. Any progress on the Newton testing? Have you seen any recent examples that the Newton technology has been successful treating similar ores? We have made progress with the Newton testing. We're conducting column tests and have been doing so since November. We're working closely with our partners at Newton. It's been an excellent relationship, and one where the dialogue is good, and any adjustments that need to be made to the processing generally are made very quickly. We're starting to enjoy some decent success with that testing, and we'll have more to say about that in the coming months. Next question is, have we started a process of sourcing a financing package for starting construction, assuming permits received on time? Not yet, but it's around the corner. Once we get close to a pre-feasibility study, we will commence our financing activities. We first have to land on the capital cost estimate, which we'll release as part of the pre-feasibility study. We will engage a financial advisor to assist us with the process, and we're quite confident that we'll be able to put a good financing package to the benefit of our shareholders and to the benefit of our stakeholders, including the lenders. One of the other questions that came up is, can you provide some color on your path to net zero? At this stage, it's preliminary in nature. But one thing that I can say is, I mentioned earlier that we're on the grid as part of our project, and one of the benefits of being on the grid is we also have access to green energy. So that's what we consider low-hanging fruit with respect to our ability to get to net zero. We're currently looking at the opportunities to move away from a diesel fleet towards an electric fleet that's currently is under review. But there's no question that when we're doing our planning and our thinking over the long term, we're constantly thinking about the path to net zero. I'd also remind everyone that our metal is going to be used for electric vehicles, which of course will have a materially positive impact to the environment and harmful emissions out of commercial vehicles. Is underground block caving being considered from the cost effectiveness angle? The answer to that is yes. We are currently reviewing the possibility of sub-level caving at the Park Salyer project. Our team, led by our COO, is evaluating that at the moment. We haven't fully landed on the preferred method, but that's certainly a method that's being contemplated. I do not see any other questions. Well, with that being the case, I wanted to thank everyone for taking the time to join us on the call today. We believe we have an exciting story in front of us, and we certainly welcome any further questions or comments, and we hope that you continue to monitor our story. We believe we're on a positive path, and we hope to make sure that's embedded in the share price with time. At this stage, I wanted to thank everyone, and please let me know if you have any additional questions or comments.